among industry stakeholders in pursuit of innovative instruments that enhance the credibility, competitiveness, liquidity, and efficiency of our capital markets. To place this event in context, it is important to appreciate the role of a well-developed financial sector in powering national economic development. The presence of deep and efficient markets is a fundamental precondition for further economic growth. Kenya's financial sector is strong, competitive, and I say vibrant as well. A debt and equity market like ours has been effective in mobilizing domestic as well as international capital, thereby complementing other forms of financing, fostering the rational embrace of elements of risk inherent in new, innovative, and pioneering enterprises and supporting long-term investment. The government is committed to expanding opportunities for both investors and issuers in Kenya. We are motivated in this quest by a number of compelling reasons. First of all, as I observed last week during the unveiling of the State Department of Investment Promotion and unveiling of the National Investment Council, there is urgent need to reverse our negative post-pandemic foreign direct investment outlook, which has seen Kenya stand out as the only regional economy that is not experiencing significant growth in foreign direct investment flows. It is our firm agenda to turn the situation around and take aggressive measures to return our economy as a leading destination for international investments. Secondly, I also indicated during my visit to the Nairobi Securities Exchange for the launch of the marketplace that it is imperative for our capital markets to devise appropriate mechanisms that leverage the savings component of all funds, including Hustler Fund, diaspora remittances, bank deposits, capital markets, SACCOs, insurance plans, savings held in fintech and other assets to provide a sustainable critical mass of capital to finance the transformation of our country. For sustainability, these mechanisms must be affordable to borrowers while giving an attractive return to savers. And I am persuaded that our capital markets can offer reliable alternative funding for all categories and sizes of business, which is also responsive to their long-term strategic intentions. This is how, by saving, Kenyans at the bottom of the economic pyramid can become lenders and investors who finance national development and economic growth. Thirdly, I have been to various parts of the country spreading the transformational footprint of our affordable housing program. It is our intention to increase the availability of cheap and safe houses so as to plug the housing deficit, which currently stands at about 5 million units. The execution will combine efficient building and construction, consumption of local materials and locally manufactured accessories and fixtures, and the employment of hundreds of thousands of both skilled and unskilled workers. Just to put it in context, we managed to unravel this whole sector about real estate, which was for a very long time hostage to high-end development of housing units. In fact, of the 50,000 units that were built every year, you could hardly get 2% of it being affordable. We decided to intentionally and deliberately desegregate the housing sector, and the biggest component that always impeded the development of not just affordable housing, but housing in general, was the cost of land. In fact, it contributed maybe up to anywhere between 20 and 30% of the cost of a house. We have since, as a government, made land for construction of houses free. And I want to congratulate many counties that have made close to 4,000 acres of land in very prime land in many parts of our towns, towns across Kenya, worth anywhere between 20 and 30 billion Kenya shillings. That's the land that currently is available for housing that you don't have to pay for. We also sorted out one more problem. Everybody was building a designer house. And you know what designer means. So to be able to build houses on scale, it became necessary to standardize all the aggregates of what builds up to a house. Standardize doors, standardize windows, standardize all the components of a house. And today I can tell the private sector proudly that we have standardized all doors for all affordable housing units. We have standardized all windows, hinges, and all the other components. And in our plan of 200,000 houses, what that means is that we, the private sector, the cement manufacturers, the steel manufacturers, the people involved in producing housing products, you now have a clear path on what you can build your business towards. In our housing plan of 200,000 houses every year, our cement manufacturers, you now have 20 million bags of cement that we can consume, 10 million tons of steel, 2 million tons of nails, 1 million doors, standardized doors, so you can produce in scale because we will consume 3 million pieces of windows. So those listening to me can begin to formulate their business and go into production because we will consume these units. So, and the reason is that once we desegregate and we standardize, we can mass produce these products. Mass production reduces the cost of production and the availability of these units. And that is the whole essence behind what we are doing in our housing space. That, of course, has other attendant. One final thing we decided to resolve using the housing fund, and hopefully these REITs and all the other REITs that will come after this, and we have encouraged our pension schemes to come on board, is the offtake plan. So if we sort out the land for construction, we also make the housing development itself competitive by producing en masse and in scale. And we provide an offtake plan that is sensitive to low-income Kenyans. Then we have sorted out the whole housing jigsaw and we can go into production. And that is what the government of Kenya is offering. We are already doing the units in 11 counties. We have advertised by 30th of this month another 7 counties. And we are on course to ensuring that we not only meet the 200,000 housing units, but we surpass it. And therefore, I am challenging our pension schemes to step up and provide the offtake. I know a fund manager is looking at a treasury bond, and that gives him a fair return. I want to encourage you that you will not only get a fair return by investing in our housing scheme, but you will have big impact. You can look at a house and you can proudly say, I supported Kenya, a Kenyan to have a roof over their heads. So I think it will be a double win. We look to the capital markets as the principal source of the funds for the affordable housing program, as well as development pillar of our transformational agenda. In particular, the investors participating in the public-private partnership that will become the favored delivery mechanism, which will benefit tremendously from affordable capital sourced in liquid and efficient capital markets. Further, beyond PPPs, the government is committed to the expeditious divestiture of government interest in various entities across several sectors through privatization. We expect the capital markets to rise to the occasion and mobilize capital and give the taxpayers excellent value. Again, as I made a commitment when I came to this stock exchange, this securities exchange last year, I made a commitment that government is going to divest so that we can democratize our wealth and allow more Kenyans to own a piece of what is Kenya, and especially entities that are currently Kenyan owned. When we went to run with that exercise, we found that the law that existed was actually the biggest impediment to any privatization. It's a law that has been there for the last almost 15 years, and it has made it impossible for any divestiture to happen and for any democratization of what is owned by government to be undertaken. Yesterday in Cabinet, we approved a new law that will provide mechanisms for Kenyans to own part of what is Kenya. And I am looking forward to the Nairobi Stock Exchange, to the Securities Exchange here, to provide the necessary capital for Kenyans to buy into these entities. Additionally, it is of particular importance for me to emphasize our strong expectation that Kenya's capital markets can and must be revitalized by enlisting the participation of micro, small and medium enterprises, as well as the large multinational companies that have set up business operations in Kenya. Listing these vital actors will deepen and invigorate the capital markets considerably. I am looking forward to days in the very near future when we will be reporting every Monday and every Thursday to be the days that were traded highest in the Nairobi Stock Exchange. My second visit to the Securities Exchange today underscores the understanding that as a strategic actor in the economy, the capital markets fraternity is going to play a central role in supporting our economic recovery in the short term and national socio-economic transformation in the long term. With its impressive diversified product offering, I am confident that the NSC can facilitate investors to construct strong portfolios across a broad range of globally attractive investment products. Like other developed markets, our capital markets now offers quasi as well as advanced products, including real estate investment trusts, exchange-traded funds, and derivatives. Besides, I am encouraged to note that the NSC has invested in world-class infrastructure to enable it separate trading from post-trading activities. As a result, a platform for novel products like day trading activities has emerged. Additionally, this infrastructure provided much-needed resilience which enabled the NSC.
Hello guys, welcome to Gusii Digital Media, the platform that brings you the latest updates as they happen in a digital way. Subscribe to our YouTube channel because the future is digital.